Welcome to the Planet MicroCap Showcase Vancouver 2024 in association with Small Cap Discoveries. I'm your host, Robert Kraft, and I'd like to introduce this keynote presentation, this virtual keynote presentation. It'll be hosted by Neil Reithinger. He is the managing partner at Eventus Advisory Group, and I'm looking forward to hearing everything that he has to say today. So with that, Neil, take it away.
Thank you, Bobby. Glad to be here. I appreciate this very much. So nice to be in front of everyone today. We are Eventus. Going to go through just a little bit about us and then get to the presentation here. We are a CFO advisory firm. We handle everything in the office of the CFO with accounting, financial operations and technical accounting, public company reporting in US and Canada, FP&A and SOX compliance, and strategic CFO services. Some people call us fractional CFO. We don't really like that term because it's a very embedded nature in terms of what we do for companies, because it's very involved. So we have to be extension of a company's team. We have to make sure that we can, stay on point with their team, with our staff, so that our knowledge can amortize with as they grow their business, and that can be to their benefit. So been around since 2008, have around 50 people, and we work with companies that are small to 2 million in revenue private companies, to 300 to 400 million in private companies, and then multi-billion-dollar entities, as well as public companies, depending on their needs. So we can staff and scale accordingly. So on my background, I'm an SEC GAAP guy. I manage what's called typically the capital markets side of what people call the firm, the SEC practice, or the public company practice. It's referred to as the capital markets side. So my experience has been here with IPO readiness, initial public offerings, SEC filings, and all the things you see here, done many SPACs, exchange listed companies, companies uplisting from the OTC to a national exchange, cross listings and so on, corporate governance, GAAP compliance, and of course, all the CFO advisory. So glad to be here today. We're going to go through the agenda here. There's a lot to cover, and these are the areas that we'll go over. And as you can see, market outlook, key leadership, and some of these areas I touch on. And what I want to make sure everybody takes away of there's certain references on slides that are notated with an E, and basically that means that stands for Eventus. That's our opinion on things. There's facts that we want to make sure we're always founded in basis, but there's also things that we have our opinion on based on what we see in the marketplace, as well as what we think is trending or what have you. So we look at ourselves as a resource and subject aggregator. We're not just the accountants in the corner looking at things and just doing our role. We actually look at what's going on in the market so we can help our clients, and we can be advisors in the advisory sense. So this also includes what we have seen from a frequently asked questions standpoint as well, so that we can have relevant topics as we go through this. Okay, so market outlook. First is as we are in 24, but as we saw from 23 as well, these are kind of the general categories of the market cap sizes of companies. Obviously, in the mega cap, there's only 45 companies. Large cap 776, and you can see that we're in the thousands of companies as your mid cap down to nano cap. So, and as you can see, the small cap market, which has been defined in many different ways, it's a great site to go to when you see our link page on the back, when you can go to some of these sites yourself on these stock tracker websites. This 300 million to 2 billion in market cap has 1,400 companies. And does that include some companies less than 300 million? Maybe. So you find there's some definitive categories that some sites will have on these, but this is generally the range in terms of where some of these companies lie. A lot of this will be geared toward the nano cap to small cap market, and what I'm talking about today. Availability of capital in these different markets varies from small to nano cap markets. Obviously, in the big bulge bracket and mega cap, totally different bankers, right? But in the areas of each one of these categories, you got different bankers, different retail predominant component for small to nano cap market. You've got, larger cap of fundamentally different drivers and valuations, right? And of course, the interest rate environment affects all of these avenues, particularly too, has an immeasurable impact. And we see that too, as money finds its way into different areas based on a yield. But there's no doubt within the small cap market that investors are looking for much more than a yield. They're looking for a lot of upside. And so therefore, some of this is where a lot of capital flows to when there is a change in that environment. Valuation and deal size have come down in the last couple of years with structured financings. Smaller funds are more clever to make deals work in terms of those structured deals. And then there's something happening with the national exchanges with the 15 million public float factor, because if there's not enough in a raise, well, you have to bring enough shares into that public float calculation so that the minimum requirement can be met on the equity requirement for example, for NASDAQ. Okay, and that of course puts a dynamic on the stock as well. All right. So bottom line on all of these is be pre-IPO ready so that the company is poised when the timing is right. Okay. Key leadership. So I want to go over a few categories here of key leadership on the going public process. On the investment banker side, you got to look at the structure and the team, understand the background and the experience and reputation of a team of bankers you might select from a standpoint of the banking team to go public. Identify distribution. Where is it? Is it institutional, reach, and type? Is it they have a retail component? Very important. And actually carefully look at the exclusivity and ROFR provisions, the right of first refusal. Those can be very tricky and actually can bind to certain firms where it's not to the benefit of the issuer. So all these things have to be looked at carefully. Proactive market fluctuations, adapt to dynamics of market conditions is always important because the bankers are doing that. So nothing is, on a best efforts basis, nothing is a firm commitment in that regard. There's windows of opportunity when there are times to be able to enter in the public markets. Focus on data, review the stats and inspect the track record of these investment banks. It's out there. Go to IPO list reports. We have data on that as well. If you want to contact me, I can give you some more information where you can get that. And there's new IBs that emerge, and sometimes they have no track record because these emerge with experienced bankers from other banks. So no track record is not necessarily a bad thing, and sometimes it's better because you never know. There can be some very new emerging, even renamed banks that have experienced bankers. So you have to kind of peel away the layers on this. Pick up the phone, contact other issuers and CEOs, and gather referrals and compare their experience to what they're saying, so that you can actually sit and see what their track record is. And remember, everything's a best efforts basis. There's a lot of uncontrollable factors. Okay. Next on the key leadership area are independent auditors. Okay, this is been a lot of activity in this area in the last 12 months with respect to some small firms and so on that are no longer auditing. And so you got to look at size and complexity. Definitively, larger companies, international operations have significant number of transactions. And so therefore, their ability, that narrows the scope a lot for an audit firm. You're just simply not going to get that breadth of experience and or personnel or reach for the ability to do, especially if it's an international market and so on, or the size of a company. You just need the bandwidth of a larger firm, right? So, but then there's times when that's not necessary as well. You can go with a smaller firm, okay? Optics. There's no question that, there may be optics on the book when that investors want to see. A smaller audit firm is very suitable, but maybe it doesn't have the name that the investment bank or the investors are looking for. That's fine. It doesn't come up that often because a lot of these firms have a great reputation, but certainly it's something that may come up to be aware of. All right. Timing and bandwidth. This is something that companies need to look at, right? The identity of the audit team and are they going to have turnover? Are they going to have the bandwidth? They're working on other engagements that they can handle the workload without interruptions. You have to ask these questions because it's a resource question and so on. And it's a fact that there is a shrinking populace of accountants in general. That is a fact. And there's a shrinking populace, even more, of auditors in general. So therefore, the ability in terms of that, the available bandwidth definitely has to be identified. And it's a very common question and completely fair to ask. Interplay on accounting issues. The word collaborate is a bad word in auditing or in accounting and as an auditor, but it doesn't mean you can't discuss with your auditor what your position is on certain issues and doesn't cross the independence line. So you can get feedback. You can't ask them for advice. You have to have a position in what you do and so on, and they can state what their thoughts are. You always have to come from some position though first, but there should be that interplay there, right? And on industry and other, there are some industries that some auditors don't undertake to be involved in, and that's fine too, but they need to be upfront about that. Okay. And there is a lot of smart firms, there's a great ability, but nevertheless, there is an expertise in certain areas that you have to make sure you look at because you want to have it appropriate for your company. And then pricing is of course a factor, but it should not be the main driver or the initial driver, because price has a lot of variability to it. You could have a large firm that's more appropriate, that certainly is going to come with a larger price, but is actually priced appropriately. And then you can have some smaller firms that would be quite expensive, but maybe it's not the right fit. So it definitely is a factor, but definitely should be the driving one. Next is on SEC counsel. So same thing, size and complexity, and there are a significant number of transactions and complex material items and geographical reach. You have to get appropriate size SEC counsel. And with optics, it doesn't happen as much with on the book, but there is still regardless, you're going to get a lot of deep benches with larger firms. With smaller firms actually have some very good leadership with respect to initial registration statements and the IPO process. So do not discount based on size. Tax matters come up a lot. Yes, there are tax matters associated with the accounting side, but also the legal side. So material tax issues arise often. So pick a firm in-house that they have some of these areas so that they can do and be involved in that both for US and Canadian transactions, or is some, as you get further out into some other international transactions, that obviously becomes more germane to a larger firm, but definitely those matters come up and it's helpful. They play a key role in the listing application. So firm needs depth of experience there. And also the depth of experience and leadership on the initial registration statement process, the S1, the F1, what have you, so that they can lead that process with the IPO. Okay. Price should be considered as well, but again, it's a combination of factors. It should not be the primary driver. So issuer and consulting, accounting, and compliance firm. This is the part of it that comes up, and that is common. This is where Eventus comes in as well, but there are many good firms that can do this work, but it's a very specific task where issuers need that support that they don't have themselves. You can't do without an auditor. You need your external banker. You need your SEC lawyer. If the company was big enough and had all the accounting department and all the technical accounting, it wouldn't need outside consulting, but most often, if not, most of the time, even with small firms, but large firms as well, that doesn't be the case because there's a lot of technical issues that come up and a lot of compliance issues that have to be met in that regard with leadership and planning. And you should not be reactive to a process or timeline. So in selecting a firm doing this, it should not be a reactive process. Implement a schedule for every filing with delineation of duties so that there's no ambiguity. And so that there is a clear indication of when things have to be implemented, when things are due, stale dates of filings. Technical accounting issues are identified early. That's very critical, that we're not being reactive to that we actually have a plan in place and see that coming so that we can be prepared for it. Valuations are a good example of that. Valuations take time. And so therefore it can't come up on day one and you need it for day two. You got to pre-plan and think about that ahead of time. So that's all part of the planning process. Tight financial operations processes. You cannot even think of having an audit unless there's timely monthly closes and quarterly cutoffs. So that is part of the financial operations that has to exist anyway, even if a company is private. Okay. Access to data for testing. You got to make sure that the client can be helped, the company can be helped with where their data is, so there can be an efficient field work by the auditor, and so that they're not stalling, because when they start, they don't want to stop the auditor. Okay. Financial statement prep, always kept current and to avoid stale periods. So you got to make sure we're always staying ahead of that, so that that is a natural part of the process and not something, again, that we're reactive to. And have to be able to scale with the issuer post IPO. So it's not just about the initial registration statement, but also what's the continuing reporting obligation that these issuers need, and being on top of that. So key is build solid financial operations and reporting best practices pre-IPO so that they are fully implemented post-IPO. That's very important, because the goal isn't the IPO or the uplist. The goal is to continually be on time with filing and on continual compliance. So regulatory pathways. We've got the S1, F1. This is the initial registration statement. This is under what's called the 33 Act for a domestic issuer. And then there's FPIs, which are foreign private issuers. Okay. Foreign private issuers, F1s, domestic S1. Okay. Register specific securities for public sale. This is a registration statement under the 33 Act is registering those securities for sale. It's not registering securities to be public only. It is actually for the sale of securities, which differs from a 34 Act registration statement. I'll get into that in a little bit. Comment period is typically 30 days for each turnaround with the SEC and the issuer. Technically speaking, it's 30 days for the initial. And then if the company's timely in its responses, you can shorten that a bit. But once cleared, it's declared effective. And there can be multiple comment periods. You don't know what those might be. The whole key is to get it down and reduce the comments each period so that this finite period of time doesn't extend out for months and months. Foreign private issuers. What is an FPI? So the foreign, like I touched on, they are any issuer incorporated under the laws of anything outside of the United States, unless they are more than 50% of outstanding voting securities or are indirectly owned by US residents. So you can't, if you do, you get kicked into domestic filer status and you're no longer out of FPI status. All right. Any of the following has to apply, as it says here. So again, you have to have that international focus, and you have to have your assets as well as operation and ownership. You also get kicked back out of FPI status. And there's an advantage to that we'll get in just a minute here. So if its business is even administered principally in the United States, then it could kick it out. Okay. So key benefits not available to domestic issuers are that, you can report under GAAP, IFRS, a local acceptable GAAP, which many countries have. Quarterly reporting is not required. It's an annual and then a semi-annual. And that annual report is 120 days. And then on the financial information goes stale more slowly. It doesn't mean the calendar is different. It just means that, well, if you don't have quarterlies, that means when it goes stale based on the semi-annual and not the quarterly. So more flexibility there. So there's definitely an advantage on FPIs. There's eligibility and compliance requirements in terms of what for Canadian registrants here. So Canadian GAAP, obviously an acceptable form of reporting. Test compliance for FPI definition it has to be performed on a certain period of time because you have to do that on an annual basis to make sure you still qualify for FPI determination, because you won't, based on my previous slide, so you don't trip up any of those components. If you are no longer eligible, they should be recast into US GAAP. So there's some complexities here to monitor in terms of FPI status, all right? Must use the US dollar as their reporting currency unless another is appropriate. So, and this is where, depending on where substantially all the registrants' locations are, that's typically what the reporting currency is going to be, all right? And here for Canadian companies as well, they usually, the financial statements are selected, should be recast into US GAAP for all periods if it is not a foreign private issuer, okay? So lastly on here, the interim reports, here's some more data for FPIs, the requirements for corporate governance. There's certain, there's a stigma or chatter about how certain executive officers are subject to greater personal liability by not being an FPI. There's certain greater risk of subject to negative consequences with respect to late filings. The view on this is, our view, again, is it doesn't really matter if you're an FPI or a domestic filer. It's incumbent upon you performing and having corporate governance that is germane to what a public company would be that investors expect. And two, if the investing public or your banker is looking for more periodic reporting, and they're going to decide, hey, if this is, it sometimes is a benefit to have that. So there are FPIs that actually kick their way into domestic reporting status for that reason, but it really is an optics issue as well as what investing public wants to see with more frequent reporting and corporate governance, okay? Other paths, there's the Reg A path. These obviously not trading. There's the Form 10 path, which gets back earlier. That's under the 34 Act. That registers a class of securities that's not for public sale. It's automatically effective after 60 days from initial filing, and it's a Form 40F or equivalent for FPIs. So doesn't register specific securities, and there's companies that can file a Form 10 to be registered, but then they still have to go through and in the case of the OTC, file a 211, which I'll get into a little bit as well. So reverse takeovers are out there, reverse mergers, shells and SPACs. For all intents and purposes, though, shells don't really exist anymore because the operating company needs to be an operating entity and not a shell, or else it will get kicked and delisted, or it will actually go to the expert market. So that technical term actually doesn't really exist anymore in that regard, although there are entities that are national exchange traded that are looking for potential acquisition or reverse merger candidate in that regard. So that term as it stands is actually is a thing of the past, all right? Next is I want to go over is navigating the registration statement process with the SEC. So as I mentioned before, the S1, F1 can be a DRS, which means draft registration statement or live filing. The purpose of a DRS is actually very effective. It is to flush out initial comments with the SEC, and it is confidential. So let's say you want to file your registration statement and you have initial comments that you're expecting and you want to not make that public yet and actually flush out the initial material comments, if you will. You can do that. You can go for several rounds like that. And then once you know that there is a pathway that all those material comments have been addressed, you go live and kick the filing to live. On what's advantage about the DRS is you can actually file blanks on certain periods that have not been closed yet. And I have not seen any pushback from the SEC on blanks on that yet, but if there is a stale period, they could push back on that and say that, but that's an advantage as well. The live filing comes back, like I said, after you can flip live after all the substantive business comments have been cleared. The DRS does become visible in live filing. It's an important point. So if you don't want to see the public to see that DRS, it won't when it's confidentially filed, but once you click live, those will become visible on EDGAR. Okay. Only areas that can remain blank once you go live filing are typically the final pricing or pricing range. Everything else, the full financials have to be there and no more blanks and so on. And that will come in once the final pricing takes place. Need a banker on the book or likely the SEC will not review filing. This is very important. There have been filings in the past where in the last couple of years where there weren't a banker on the book. The SEC will not review that anymore because it's basically they don't take it seriously. So it's important that that's identified even on the DRS, okay? SRCs, audit requirements, comment periods. SRCs, they have a scaled down requirement, less than public float here. These are all important metrics for smaller reporting companies, which are an advantage. 2-year financials, not 3-year financials. The less extensive narrative disclosure on executive comp. So these are an advantage in another area as well. Like I mentioned, 2 fiscal periods in contrast for 3 fiscal years for larger reporting companies. Okay. And note, FPIs are not able to utilize the scale down disclosure requirements for SRCs. Okay. So this is an important factor for FPIs. Expected SEC response time, like I said earlier, was 30 days. Typical could be sooner. Plan for around 3 rounds of comments. Let's say 3 times 30 is 90 if you can shorten the response period. But when you think about that 3-month period for 3 rounds is very reasonable. So again, not including turning around time from the issuer. Always be prepared with updated financials to weather the time duration and stay clear of staleness. That's 135 days. Okay. Division of Corporate Finance focuses disclosure is not to opine. This is not the Division of Enforcement. They are proactive with issuers to respond timely and to not provide advice, but to provide and answer questions so that the filing can eventually make its way and be effective. The number and nature of comments is a litmus test. The filings that have had a lot of questions, I've had those very complicated filings that had almost 100 comments, you pretty much know they don't like it. So that is a litmus test so if you get a small number of comments, that's great news and very positive. Political climate. And what I mentioned by that is the political climate is depending on the administration. There is a skewing toward comments in previous administrations that had to only be founded on codification and based on rulemaking, and as opposed to subjective. That has changed, which is is unfortunate because that of course affects capital formation, that there are subjective comments, but that is obviously everything's political in nature in that regards, but it is a fact. Currently there is that comment quota. So, this, like any election year, that may change, and these regulatory bodies actually change as well. So that is important to take away there but I believe all in all, the Division of Corporate Finance is very fair. National Exchange, self-regulatory organizations, and OTC. So you have your 2 main SROs, self-regulatory organizations, which basically means national exchanges, NASDAQ and NYSE, the OTC markets, which is not an SRO. And then there are others, which I won't touch on, that are kind of forming out there that are looking to add another national exchange. So there could be some disruption and more activity within the national exchange market besides NASDAQ and NYSE. I'm going to focus here on NASDAQ for requirements only right now, initially for timing purposes. So NASDAQ, listing agreement, all electronic, and generally SEC counsel takes the lead. Like I said earlier, that's why needs to be good leadership on the SEC side. Market tiers, these are the 3 market tiers, and this does correlate to size and complexity and so on of companies. with regard to what tier you're going to follow in as a filer. There's both quantitative and qualitative requirements that are needed. So both are as equally as essential. And for the initial and continued listing requirements, you know, the NASDAQ is focused, and especially recently, on the integrity of their exchange, I believe. And I believe that our belief on that is based on certain, you know, observations with regard to the listing standards, maybe not changing as much, but certainly being much more stringent about how companies can qualify for them. Okay. There were some areas that there could be a little flexibility with regard to some calculations. I don't believe that wiggle room is not there. I think they're doing it to build integrity. There's been a strategy to purge penny stocks. There's a recent Wall Street Journal article about that, so they can clean that up and build that integrity back. And rightly so, because some of these companies deservedly maybe were premature to get on NASDAQ. So corporate governance requirements, majority of independent directors, you got to have an audit committee, a comp committee, board diversity rules. Those can get very qualitative and complicated. Annual meetings required no later than after the end of fiscal year. You got to have shareholder approval on certain capital transactions. Very important, very important. Other factors, you know, that are very important is, you know, the types of financings, the types of, you know, the officers and directors and the proceedings that they've had in the last 10 years, you know, bad actors, quality of management, shareholder list, share range analysis. All these things are very essential. Historical and pro forma balance sheet and income statement projections, burn rate analysis. That's what I was getting at. Some of these burn rate analysis for the listing qualification, you could maybe factor out, you know, non-cash items. Not the case. It's really, if your burn rate, if you have a net income and you got non-cash items in there and you want to factor out non-cash and say this is my true EBITDA, not going to work anymore. Really, it has to really be based on pure on net income calculation of these companies and what they're doing. Okay, NASDAQ continued here. We've got the seasoning rules. 1 year wait period post reverse merger with a public shell. Okay, very important rules for seasoning here. All the required reports have to have been filed in that 1 year period, at least one annual report. There's stock price requirements, and if there is a firm commitment with a $40 million in proceeds, that is an exception there. So that's obviously a quite sizable offering. Latest development here is that NYSE is now requiring minimum 10 million raised for IPOs. Question is, will NASDAQ follow? I haven't heard that yet, but they are no longer will list any company with less than 10 million in IPO amount. OTC markets. These are the different tiers of OTC markets. Again, this is not a national exchange. Eligibility, they have different applicability for filing requirements. You have to file a 15C211. The OTC will go through an initial review of that. 15C211. That is not a filing requirement on the national exchange. If not an SRO, FINRA has a role. So, and then FINRA here, I'm just going to go through this quickly because this is something specific to the OTC. They have their filing requirements and that they go through an analysis, and a company cannot continue trading, cannot begin trading unless it is approved by FINRA and so on. And they have the current public information has to be at all times with the sponsoring broker dealer under Rule 15C211. All right. Continued more on some FINRA requirements, corporation documents, intent to asset purchase. They want to know what's going on with this cap table. What are the major material items that are affecting the company? Unaudited financial statement for the last 2 years in interim reports. You know, so some of these can be, so they're going to look at you know, cap table, financings, you know, what's affecting this company so that they know the market integrity of who's involved, detailed business plan and the steps involved and furtherance of that business plan. So this is only can be filed by a broker dealer. It can't be filed by the company. So they're going to go through each one of these categories so that they can appropriately approve the application. So very high focus on cap table here. Okay, so the and why? Because it's highly scrutinized and it's both quantitatively and qualitatively, because, you know, equity linked securities, derivative securities, and so on. What is it out there so that it's transparent about the nature of that cap table and what's going to affect the price of the stock? Okay. Response times vary, usually planned for 3 to 4 months. in some cases up to a year. They beat to their own drum. So that is not something like the SEC where you have 30 days to reply. So it's a different timeline. Okay. And one spinner is satisfied, then under Rule 15C211, then the trading symbol is issued and market maker can quote securities. Okay. And then there's continued compliance on OTC markets by filing on OTC markets. Again, this is not applicable on the national exchange side. So areas of focus, scrutiny, and delay. I just want to lay out each one of these here, very important. Historical cap table I mentioned. The pro forma dilution and cap table on a registration statement is important. That is a very critical area with respect to how the offering as well as existing cap table affects dilution and cap. Cheap stock, if you've issued stock for 50 cents 2 months prior to an offering at $4, there's a lot of explaining to do there. That is going to be, they're going to get a lot of comments on that. Bad actors just doesn't fly. You're going to get kicked back, and it's going to be very difficult to be able to get past that. So the complexion of the cap table is very important. Valuation issues come up pertaining to complicated finance transactions. So we've got to stay ahead of those and make sure that those are planned for so that those can be dealt with ahead of time, not holding up a filing. Management's plan for liquidity get a lot of comments from the SEC there. If there's a deficiencies in the close process, that's just going to hold up getting reporting done, and inability to prepare those financials. So it's just a matter of, and staying on top of those stale periods. Don't want to have that happen without being prepared that you're going to remedy that with current financials. And then perceived exceptions. I touched on these. These are the areas where, hey, maybe we can, work on the NASDAQ burn rate analysis because we can factor out stock comp and non-cash. Not going to work. It's just those perceptions, whether they were there or not earlier, are basically, it's going to be a bright line approach on more of the way the application process occurs. Okay. So, and just timeline here. Okay. IPO to some of these can happen concurrently. So 1 to 4 months on registration statement prep, 4 to 8 months for comment period. And during that comment period, it doesn't mean that the exchange application can't be filed. It can be done concurrently. So basically effectiveness in pricing, if you look at this in the aggregate, between 8 and 9 months. So a lot of these things can be done concurrently by way of, that's why I colored boxes here. These two areas can be done. SEC comments and clear exchange comments can be done at the same time. So some of these things can be, if they're planned out very efficiently. All right, contact information. There's a QR code here. This is me. If you click on the QR code, you will get my LinkedIn, and I will get back to you as quickly as I can. And I will stop there. And if there's any questions, well, I guess I do mention footnotes here. This is a presentation available for everyone. There's links here when you see it referenced elsewhere in the presentation. Bobby, I'll hand it back to you.
Very good. All right. Thank you for that full keynote there, Neil. So I got a couple questions for you. We're running close on time, might even be right up against it, but I wanted to get these two in there. So first question is, knowing that there can be a multitude of factors beyond any company's control that is considering a go public strategy, not the least of which is the right window for the capital markets, is there a driving message that you would want to convey to companies to consider before embarking on this path?
I would say there's two, and first is IPO readiness. Is you don't know when that window is going to open up, and therefore you have to be ready. And you can't say I'm going to do it when it does open up, because based on what I went through and audited financials, and getting to an audit financials and getting to audit readiness is a whole process and can take much longer than companies expect. Very critical. So it's good for the business as well to be IPO ready, good financial processes in place and what have you, so that when it's ready to turn that spigot on, you're ready to go. And that's not a question. Number two, I would say, is the second thing is valuation. Got to be realistic about fair value and market valuation of the company. I'm worth $100 million. Well, that may not be the valuation for the IPO, or the valuation for a raise for an uplist, and it may be 20 or 30 million. So that's just very important to manage expectations.
Very good. All right, final question for you here today. I'm going to quickly run through it. So you covered a lot of ground here that involves many parties, from auditors, attorneys, national exchanges, et cetera. Lot of components for sure. And while you touched on a quick About Us page at the beginning of your presentation, what would you want our listeners to know as to how Eventus fits into all this?
Yeah, we're not just the bean counters in the corner. We are an advisory group. We can do all the work. We're not auditors, and that's pretty much what we don't do because we don't want to, and we're not independent like they need to be. So we're thought leaders. We want to be looked at as a meaningful part and a firm that has leadership. So that if a company wants to talk to us and we're not doing our Eventus thing, which is all the work we do, we can still say, how can we guide you? What can we do to help with so that you can embark on this path? Maybe we want to help plan this path for them, make introductions, whether it be the lawyers, the auditors, the banker. So we want to be a true advisory firm in that regard and so on. So the CPA has been reinvented. Okay. So
Good stuff. All right. Well, Neil, we're there, man. Thank you so much for this keynote today and sharing all of this information. Look forward to our continued conversations. Good luck. Stay safe. And I'll see you soon.
Thanks very much. Okay. Have a good rest of your day.